Good morning and welcome. You're watching Market Cafe on ET Now. We have, of course, the key RBI MPC outcome coming through today, and that will be largely the focus, especially in Indian markets. But nonetheless, as we always do on the show, let's take you through all that's happening in global markets, as well as what's the news flow like, both globally as well as domestically, and then we'll take you all through individual stocks. So that's how we'll take you through the next 1 hour. And we'll prep you for trade in that particular fashion. Ankita, talk to us about how global markets are doing. Firstly, good morning. I forgot to introduce Ankita. That's Ankita Saxena and I'm Harsh Saita.
Good morning to you, Harsh, and good morning, everyone. So, Harsh, we did see a sell-off coming in yesterday as well. I mean, 3 straight days of sell-off for Nasdaq and S&P 500. And Nasdaq Composite fell for the 3rd straight day, losing session as investors shifted away from the growth stocks amid signs that the US economy is weakening. The tech-heavy Nasdaq sank 1%, while the broad-based S&P 500 dipped 0.25%. The Nasdaq, the Dow Jones Industrial Average, however, bucked the trend and added 80 points, bolstered by basically an outperformance by the healthcare stocks. Now, yesterday's move came in after traders mulled over the latest ADP private payrolls report, which showed slowing job growth in March. That followed Tuesday's job opening reports that suggested that Federal Reserve's efforts to cool the labor market might finally be having some sort of an effect. Now, remember, in February, the number of available positions fell below the 10 million for the first time in nearly 2 years, a sign that the labor market is actually cooling off as a result of all the rate hikes that the Fed has been doing. Now, investors are awaiting the jobless claims data, a very important number about the labor market. For more insights, of course, into the labor market situation in the US as of today. And St. Louis Fed President James Bullard is also slated to speak in the morning as of today, so we will be keeping an eye out on that. Thursday will also cap off a shortened trading week with the markets closed for Good Friday tomorrow. So an important day today, 2 important key things. The Fed President, James Bullard, is going to give out a speech, and of course we have the jobless data claims that is likely to come out of the US markets. Now, European stocks also fell in the straight 3rd session. The Pan-European Stock 600 index provisionally closed down for 0.1%, with all the sectors and major bourses pointing in different directions. DAX was down 0.5%, and CSE was also down 0.3% in trade. So a negative global handover coming in there. Harsh, tell us what are the moves in crude?
Well, Ankita, as you correctly pointed out, there's of course, or rather taking a cue from what you said, there's of course a reduction in the payroll or the available jobs in the United States, which means that there's a bit of a slowdown that's coming through, and that's reflecting in oil prices as well. So we've seen oil prices just sink a wee bit, but not really dive in any meaningful fashion. Of course, that 4% cut with regard to global oil production at this point of time helping oil stay stable above that $80 a barrel mark. So we're seeing Brent still above $84 a barrel, and we're seeing WTI still hold above the $80 a barrel mark. Of course, a slowdown is what even OPEC Plus are factoring in. So we are expected to see that slowdown come through, and that's the anticipation behind the reduction in the supply that OPEC Plus gives to the world. And that's caused that bit of a spike temporarily. But as things slow down and as the economic data starts to pour in, that things are slowing down, it's expected that oil will remain around that $80 a barrel mark. But of course, divergent views there, but at the moment, that's where it's at.
And well, let's quickly look at all the events that you need to keep an eye out on. For the global cues, we have the US crude oil inventories and the US initial jobless claims that I mentioned. Very key important number to take stock of the labor market health in the US. Of course, back home, we have the most important RBI interest rate decision that is likely to come out today, and Harsh tracks that very closely for you. Also, we have the weekly expiry date that is as of today, and of course in corporate actions we have the Avalon's technology IPO that is closing for subscription, And we have some distilleries that will be considering the matter of rights issue as of today. So a lot of events, a day packed, especially with the RBI interest rate decision. But Harsh, take us through all this news, all the global headlines that made news overnight.
Well, yes, let's quickly switch over. First is, of course, the private payrolls data. Private sector hiring in the US has decelerated in March. This according to payroll processing firm ADP. Payrolls rose by just 145,000 for the month from 261,000 in February and well below the Dow Jones estimate of 210,000. This takes first quarter hiring to an average of 175,000, and that's quite low jobs a month, and that's down from 261,000 in the fourth quarter.
An American multinational conglomerate, Fedex, will consolidate its separate delivery companies into a single entity as the group slims its bloated infrastructure to compete better with United Parcel Service and Amazon. Remember this decision to integrate the FedEx Ground with the FedEx Express overnight air delivery business was announced almost a year after activist investor D.E. Shaw pushed for change and won 2 additional board seats.
Well, let's move on to global telecom giant Vodafone in the fore after the company's Spanish unit becomes the subject of takeover interest. The operator has been approached by numerous private equity investors and strategic suitors for a deal worth more than $4 billion. This according to Bloomberg. Sources also say that Apollo is among suitors interested in the telco's Spanish business.
And Saudi Arabia hikes prices for all of its oil sales to Asian customers for the month of May after the kingdom led a surprise OPEC Plus output cut. State-owned Saudi Aramco raised its selling price for flagship Arab Light crude to Asia by 30 cents a barrel, boosting prices for a third consecutive month.
And we'll move to New Zealand. New Zealand joins the slew of countries in their battle against inflation. Country's central bank has gone ahead and hiked its benchmark cash rate by 50 basis points, 0.5%, to more than a 14-year peak of 5.25%, saying it's still open to further tightening.
And well, NATO has added its 31st member, Finland. Although this marks the end of the Finnish neutrality, it comes after the war in Ukraine. Now, coming as a major setback for Russia, but how is this development really significant? Let's take a look at an explainer.
Now, global geopolitics underwent this tectonic shift, and this has happened as Finland has become the 31st country to join NATO, the North Atlantic Treaty Organization. Finland's NATO membership has spelled the end of 7 decades of Finland's neutrality so far. It comes in the middle of the ongoing war in Ukraine, and of course it's a major setback to Russia. NATO is the North Atlantic Treaty Organization. It was formed in 1949. The world back then, in 1949, was divided into 2 blocks. The Western Bloc, which was led by the United States, and the Soviet Bloc, which was led by the Soviet Union then. The United States and 11 other countries have formed NATO, and they've done this with the aim to challenge Soviet expansion in Europe. The logic was pretty simple. NATO members agreed to help one another if they came under attack from the Soviets. But Finland was not among NATO's founding members. In fact, a year before NATO's formation, it signed this friendship agreement with the Soviet Union, and they agreed to be a neutral country. And while NATO kept adding these new members after the Soviet Union's collapse in 1991, Finland continued to hold on to its neutrality. So what has really changed for Finland? Well, for a start, Finland shares this long land border with Russia. To be precise, it is 1,340 kilometers of a border. And since Russia's invasion of Ukraine, Finland now fears that Russian expansionism may reach its doors anytime. So NATO's membership assures Finland that any Russian misadventure would meet the full might of the Western powers. This move is a huge setback to Russian President Vladimir Putin, no doubt, Remember, it was Ukraine's growing ambitions to join the NATO that irked Putin. Eventually, it led to the war in Ukraine. And while Putin had hoped that the war would kill similar ambitions of other European countries, it now turns out that it has had the exact opposite effect. Finland's NATO membership has doubled Russia's border with the world's biggest security alliance, and that's NATO. And remember, Finland is not alone. Its neighbor Sweden, which has avoided military alliances for more than 200 years, is now also in that queue to join NATO. And while Russia has threatened to retaliate, it seems the more Putin reacts, the more he would encourage Europe's integration with NATO.
Well, always interesting, those explainers by Vikram, isn't it, Ankita?
Absolutely, Harsh.
And we'll slip with that into a short break. More on the other side, of course, we'll go domestic.
Welcome back. Here watching Market Cafe with me, Ankita Saxena, and with me is, of course, Harsh Saita. And moving on, Donald Trump made history on Tuesday when he became the first US former or sitting president to appear in a court as a criminal defendant. Now, after surrendering in a New York court, Trump pleaded not guilty to 34 felony counts of falsifying business records. Calling this indictment a witch hunt, Trump claimed that the US was going to hell, delivering a campaign-style speech to cheering supporters. He also said that criminal is the attorney who was prosecuting him, and the judge presiding over his case hates him. Now, the US elections were rigged and Democrats are out there to get him. Nonetheless, we want to today understand why a defendant could accuse judiciary for political bias in the US and how the system is different than in India. We spoke with a couple of experts. Listen in to what they had to say.
First of all, I would take a little objection to the term political vendetta because of Trump's own behavior. I mean, there's palpable evidence of his having really gone outside the bounds of the Constitution to try to overturn the results of a presidential election. And of course, the case in which he's been indicted and which will now proceed to trial is perhaps the slightest of the cases that he is currently involved in.
In the process, what's going to happen is as follows. The lawyers for Mr. Trump are going to make defense motions. And those motions are going to include requests that the indictment against Mr. Trump be dismissed for legal bases. They're going to argue that certain things occurred which do not justify the indictment, like they will argue that the statute of limitations for the crimes for which he was indicted have passed.
Jury is still out on that. And as you see, Ambassador Shankar has brought out that this, the present case is perhaps the most weakest in a certain sense, in the sense the Americans are willing to tolerate sexual peccadillos of their leaders. Mr. Clinton, for example, was one of them. He still got elected. Even the kind of charges, the other charges that have been laid out there, they're willing to go by them.
It is a short-term help and a long-term hindrance. He is able to generate support and sort of re-magnetize those individuals who are on the fence about him or maybe tiring of him, but have problems with the larger political system. He's able to bring them back into the fold, and he's been able to utilize that energy to raise enormous amounts of money in recent days for his re-election campaign. So in that regard, it's a help.
We will take a switch. Yesterday morning, Apple revealed the barricade of its first retail store in India at the Geo World Drive Mall. And this, of course, marked officially that with Mumbai officially marking, apologies for that, the upcoming opening of Apple BKC inspired by the city itself. My colleague Aishwarya was on the site yesterday and she sent us this report.
Well, Apple says hello to Mumbai with the unveiling of the barricade of its very first India retail store. This marks the debut and also takes its global store count to more than 522 stores and its presence across more than 25 countries. Now, what can we expect of this retail store, where the opening is not yet declared? It's still under wraps, and we look forward to that. But Apple says this store will meet the global standards. And if you've ever been to an Apple store overseas, you've seen the Genius bars where you can actually service your iPhones or any of your Apple products. You'll also see them matching up to global standards in terms of all the services that are available at any other Apple retail stores, as well as the whole range of Apple products will be and is expected to be available at this store right here in Mumbai. After Mumbai, there are reports that we could see Apple stores coming up in cities like Bengaluru and Delhi as well going forward.
And well, moving on from the Apple Store launch to Hero MotoCorp that has announced voluntary retirement scheme for all its employees. Now, there is a rare development for a two-wheeler company as the giant gears up to make the organization future ready. So what does the VRS include and how does this impact the company's performance? My colleague Shrishti Sharma is here with all the details.
Well, yes, that's one of the rare times we are seeing a two-wheeler major offering a VRS to all its employees. And I'm talking about Hero MotoCorp, wherein this time around they have come up and said that they will be offering VRS, that is voluntary retirement scheme, for all their employees in a vision to make the organization agile as well as future ready, wherein they are looking to consolidate the roles as well as reducing the layers. Not just they are paying their employees a one-time lump sum payment. Other than that, there are a lot many benefits in terms of variable pay, gifts, medical coverage, retention of company car, reallocation assistance as well as career support. So it's going to be a bit of a hefty amount for Hero MotoCorp when they are offering so many services, despite the fact that one-time lump sum payment is also involved. But how do analysts see this move is definitely on the positive side, because this will improve the efficiency of the company. Not just that, it will reduce the cost burden and help and support the margins of the company as well. And the company also looking forward to improve the efficiency within a company through a lean and a more productive organization going ahead. But the timing is something that needs to be watched out for, because two-wheeler industry in India is definitely not doing that great, as we all know. Although the March sales data was bit giving a respite, but going ahead the outlook is not that rosy. So keeping this in view, the timing is something which is a bit questionable, but nevertheless, whenever a company offers a VRS is taken positively. But key to note that who all companies do offer VRS in the auto space. So you will remember that Bajaj Auto back in 2007 came up with a VRS scheme for just one particular plant. Not just that, TVS Motor and Eicher Motors, I don't believe that they do have a VRS scheme at play. But from the other auto companies, Ashok Leyland, Endurance Tech and Bharat Forge are some of the other companies that do offer VRS at this point in time. And Hero MotoCorp joining the league. Back to you.
Well, let's take a quick switch. Thank you for that, Srishti. Dr. Feridoon Fesharaki was on our channel. He's the founder and chairman of FGE, and he spoke to us exclusively and said that $100 on crude is not far away. We spoke about crude and how crude is faring earlier in the show, and in fact, he believes that we can see those levels as early as this year itself. He also said that Russian oil supply has steadied the market a tad bit, and there were no signs visible for a further cut of output by the OPEC. Listen to that excerpt.
We see the demand growth this year, 2.5 million barrels per day, of which maybe 1.5 million barrels per day is COVID recovery, and 1 million barrels per day based on the strength of the market. So very bullish on the demand side. So if OPEC is seeing something, we don't see it at this stage. It is possible that they've had difficulty finding customers in Asia, particularly in China and India, as they're buying so much Russian crude. So they say, okay, we see some weakness in, maybe not in demand, but in procurement, and taking some action. I'm sure they have good reasons. But as of today, we can't see why they did it.
Dr. Fesharaki, there is a saying in global energy markets, an old saying that oil business is 1% business and 99% politics. How are you witnessing geopolitical, tension between some of the large geographies which consume a lot and produce a lot as well? For example, US has now become a net producer, net exporter of oil. How are those equations also playing a part in energy markets right now and these steps which are being taken?
Actually, I don't agree with the theory of 99% politics, 1% oil. I think that is 70, 80% of it is fundamentals, supply demand, and maybe 20% politics. So maybe that was true 20 years ago, but not today. US now is the largest producer of oil. And if you add crude and products together and condensate, the US is exporting more than Saudi Arabia. But US is also a huge consumer. And consumer means that most of the oil that they produce, they end up using it themselves. So they are different from Saudis, where they have extra oil that they export and they can control it. In the US, there are small producers, private producers. The government almost has no role in this matter at all. The government is just a bystander. So private companies run the show. But the geopolitics do impact things. At the moment, we see the Saudis and the Iranians reaching a diplomatic solution. We don't see any big geopolitical issues in front of us. In case of Russia, the price cap for Russia has failed. Russian oil still is flowing pretty much as before. And the Russians are basically replacing all of Europe with China and India and Turkey. And oil is still flowing at discounted prices, of course, but the flow of oil cannot be stopped by politics.
And well, with that, it's time for us to slip into a short break. Don't go anywhere. On the other side, we go stock specific.
Welcome back. You're watching Market Cafe on ET Now. We're going to quickly take you through what Asian markets are up to in early trade today. So we're seeing a bit of a red across Asian markets. The SGX Nifty itself absolutely flat, but trading with a negative bias. We're seeing the SX 200 also down around a third of a percent or so, a fifth of a percent rather. We have the Nikkei, which is down around 1%. The Hang Seng, as you can see, flat with a negative bias as well. The Nikkei down around 1% in early trade. We're seeing losses on the Kospi as well, just a wee bit, around 0.5% or 2/3% lower on the Kospi as well. So we're seeing negative cues coming through from Asian markets. But the main cue for Indian markets today is going to be that key RBI MPC meet. We're expecting to see around a 25 basis point rate hike. Now, rate hikes have been progressively coming off from that 50 basis point hike, last seen in 2022. It's come down to 25 basis points now. And maybe there's a switch of stance as well from withdrawal of accommodation to neutral. The RBI governor has maintained a withdrawal of accommodation since quite some time now, and hopefully that switches over to neutral and now rates stay where they are. That's at least the hope, because they've gone up from 4% at the start of the last financial year, FY22, to 6.5%, and with another hike coming through at the first meeting of FY23, that will go up to 6.75%. So that's quite a steep jump, and the economy may need some time to absorb that jump, and the impact of that will also need to be seen with regard to growth and inflation. Talking of growth and inflation, growth is expected to be around that 6.5% mark for FY24, and that number could get revised. There's a downside risk to that number. You can see on your screen that inflation was or is expected to be 6.5% for this year and below the 6% mark for next year. Growth estimates 7% for FY23 and 6.4%. This is the RBI number, of course, for growth, and there could be a downward revision to that. So keep your eye out on all of that. Of course, the global context also needs to be taken care of, because we're seeing hikes across the world. We did see the Bank of New Zealand as well hike rates yesterday by 50 basis points, 0.5%. So we need, as India, we need to follow that trend, and the RBI is very mindful of that. So keep your eye out. It's of course a big day.
A big day indeed, Harsh, as you mentioned, and you will be closing that, of course, tracking that closely for us. But for now, let's take you through all the stocks that you need to keep an eye out on. And for that, we have, of course, Lisa in the studio with us and Vamakshi as well. But first up, Lisa, take us through all the stocks that are on your radar that we need to keep out in today's trading session.
Well, yes, good morning. First of all, a bunch of companies have posted their Q4 updates, particularly from the financial space. So let's get started with that. Ujjivan Small Finance Bank, the total deposits grew 39% on year-on-year basis. CASA growth was 35%, and the total disbursements was up 23% on year-on-year basis, while the advances was up 33% and stood at 24,000 odd crore. Cholamandalam Investments, the disbursements was healthy up year too. It was up 65% year-on-year. The disbursements was mainly led by the vehicle finance business, which grew by 39%, approximately at 12,000 crore. Equitas Small Finance Bank Limited, the gross advances, that grew at around 36% on year-on-year basis, and the disbursement was quite strong at 80%, while the total deposits was up 34% on year-on-year basis. On the metal space, Tata Steel has provided their operational updates. India deliveries was the highest recorded quarterly deliveries which the company saw. It was up at around 9% on Q-on-Q basis, and it stood at 5.15 million tons. Europe deliveries also was up 7% on Q-on-Q basis, which reflected the improving demand environment. On the other, RVNL has received 121 crore railway order, and Dalmia Bharat Sugar will be setting up 250 KLPD distillery for rupees 400 crore. And lastly, Tatva Chintan Pharma will be commencing commercial production for their new facility at the Dahej manufacturing facility. So, well, these are the stocks that will be on investors' radar for today.
Well, thanks so much for that, Lisa. Let me switch over to Vamakshi. Good morning, Vamakshi. You've been going through all the numbers with regard to Avenue Supermarts because they've come out with some of their numbers as well. Weak, would you suggest?
Well, it would look like a disappointing set of numbers, but the store count, however, is seeming in line. When we look at the revenue, that did see an uptick of nearly 20.1% on a year-on-year basis, and the revenue stands at 10,340 crores for FY23, and now definitely, that was for Q4 of FY23, and in fact, the jump that we're seeing in the fourth quarter highlights that there is a 3-year CAGR of nearly 8.6%. In Q4, the company opened up 18 new stores, which is in comparison to nearly 21 that were added in Q4 of last year, and the above addition of nearly 18 stores takes the total store addition to 324 stores. Now, the average revenue per store came in at only 2.3%, 3-year CAGR basis. Avenue revenue per square feet disappointed at which actually declined by nearly 3% on a 3-year CAGR basis, and 2.6% decline coming in on a year-on-year basis. So what we're overall assessing is that the throughput is disappointing for Avenue Supermarts, but the store count is in line.
All right, thank you so much for that, Vamakshi. And moving on, Reliance Retail has launched beauty omni retail platform Tiara, and the company has announced the launch of the Tiara app and website alongside the opening of its flagship store at the Geo World Drive in Mumbai's BKC. My colleague Aishwarya Patil filed this report earlier. Let's take a look.
Well, the competition in the beauty space is getting tougher by the day. While earlier there was speculation of Reliance Retail acquiring the Sephora brand, with the launch of their very first and very own beauty retail brand, Tiara, this will be competing with the likes of Sephora, Shopper Stop Beauty, Nika, and also MAC Cosmetics, and other key players in the space. Now, this store has some interactive factors for the consumers.
Well, thank you so much for that, Aishwarya. Let's quickly move on. Rents in India's technology hub, Bengaluru, have nearly doubled since the start of the last year, making it the country's hottest residential market. So what are the triggers here, and what does this surge signify? Vamakshi, of course, is in the studio with us, and she's going to talk us through that.
Well, absolutely. Like you rightly pointed out, rent in India's technology hub of Bangalore have nearly doubled since the start of last year, and now it has definitely become the country's hottest residential market. In fact, landlords are charging the highest proportion of their property's value as rent. Now, one of the main important triggers that has come in for these higher rents is the shortfall in supply. We did see that construction had halted during the pandemic. In fact, in Q1 2023, Bangalore added only 13,560 residential units, up just 3% when we compare it to a city like Mumbai, which added nearly 58% in terms of new launches. Now, the rents apart from this have also surged on account of other factors. Now, Bengaluru, as we all know, is home to about 1.5 million workers, and these are employed at companies such as Google, Amazon, Goldman Sachs, as well as Accenture. Now, that population during the pandemic was displaced. The staff had moved to a remote working environment, and that is the reason why the rents had actually fallen back then. But now what has happened is Bangalore's economy as well as the private sector is now buzzing back to life. Now, landlords are looking to recoup lost revenue definitely, and they are finding themselves in a seller's market. So on the back of that, we're seeing rents rise in Bangalore. And not just Bangalore, when we look at the rental yields across India, they're seeing a rebound. When we look at Bangalore, the yields have rebounded from 3.4% in 2020 to 3.9% in 2022. Mumbai, Gurgaon, New Delhi and Pune, all across, we're seeing that the rental yields have rebounded. But on the back of this news flow that is coming specifically on Bangalore, in terms of the yield, in terms of the rental doubling, South-based developers are expected to benefit, and that is on account that the rising rentals could incentivize home buyers to purchase new homes. In fact, when you look at the Q1 sales that came in for Bangalore for this year itself, from Jan to March, home sales stood at 15,660 units, up nearly 16% on a year-on-year basis. So on the back of this news flow, we're seeing that Shobha, Brigade, Prestige, Godrej Properties, Mahindra Lifespace and Urban Smart Space are some of the developers which do have an exposure to the southern region, and on the back of this news flow, they could definitely be in focus.
All right, then thank you so much for that, Vamakshi. And we'll move on. Now, gold prices have rallied by more than 1,000 rupees to touch a lifetime high of rupees 61,000 per 10 grams in New Delhi. The yellow metal had settled at 60,000 per 10 grams in earlier trade. Analysts say that the positive momentum in gold prices could continue amid macroeconomic uncertainty. And well, we'll move on from that. Let's take a look at the Q4 updates for Nika. The company is seeing some strong growth in beauty and personal care segments, while the fashion segment remains subdued. Let's go across to my colleague Sharad to know more about this. Over to you, Sharad.
Well, yes, in focus we are having Nika, and this is the first time actually the update is coming, especially on the revenue front as well. But overall, if we see, it has been mixed quarter. Now, there is a BPC segment, which is the beauty personal care product. That segment has actually given a very strong performance. And also, if you talk about the fashion segment, the fashion business segment, that has come under a subdued manner of growth. Now, of course, the management has stated in the press release that they're expecting the 9-month growth rate to actually reflect for FY23 as well. That means it's a 42% growth in the gross merchandise value and a 37% revenue growth expected. Now, that is something in the mid-30s. That is what has been estimated by the management. Apart from this, this vertical has actually experienced a strong growth, the BPC segment in the fourth quarter as well as the entire FY23. And do remember that the growth rates has been higher because of partly by the brand called Pink Love, where the sale had happened, and because of that, that aided the top line numbers going ahead. But do remember that the overall the consumer discretionary spending actually did impact the fashion business, and that is why they have stated that the estimated growth which they have factored in for the fourth quarter, that's expected to come in the late teens. Now, of course, the numbers, if we see, was almost 32% growth in the first 9 months of FY23. So that is over there. We are seeing a slashing of estimates of the returns coming in for the fashion segment as well. But overall, we see it's still a mixed quarter coming from Nika. But do remember, a lot of competition might be coming in, as Reliance Retail has also launched its online platform in the beauty space as well.
Well, thanks for that, Sharad. Let me quickly move on. We also had Ajay Srivastava, who's the CEO at Dimensions Corporate Finance Services, who was on the channel a few days back, and he believes that Indian investors will have mediocre returns till elections. He also believes that investors could see 15% returns in 3 years, but will be back-ended. So listen in to what he had to say.
I would tend to believe that the returns will come in the latter part of the year, 3-year period for India particularly, because we have an election year and the government is going to ensure everything to ensure that inflation is not going to go out of control. So when you saw price control on steel, you saw sugar, action on sugar. Now you've seen the debt mutual funds indexation benefit going away. So, in a sense, you will see Indian corporates to see profits are going to be capped out for the next 18 months till elections are over. Inflation is a big challenge. Unemployment is a bigger challenge in the country. And therefore, any political party will ensure that these levers or visible levers, which is the price of products, continues to be under control. And that's going to be the capping scenario for Indian equities, because the moment you start to make a little bit of supernormal profits, you've seen government action to come and tap that supernormal profit. So therefore, I think Indian investors should brace themselves that till the elections, you'll have very, very mediocre returns. Maybe post-elections and the global market becoming, some buying come from the overseas market, you'll see extraordinary returns perhaps after a very long, steady base. So I would say 15% return on a 3-year basis, reasonably possible, but it'll be back-ended. Fundamentally believe that the metal stories which are there are long-term stories, high dividend-paying stories. They're almost in monopoly status. And the fact that no matter what government control does, international prices have a linkage to this. So there's certainly at any correction, you need to keep buying metal in our view. And that's how, we've been doing that for the last so many years now, quite profitably, I hope so. But the fact remains that you need to invest in companies who are monopolists. That's one. Number two is high leverage is going to be a killer in this market. It's going to be bad for equities. Interest cost is going to go up. So if you look at the telecom company with 1 lakh crore of debt, they're going to pay a hell of a lot of interest on this cost. So I think interest. Number three is discretionary income product. Whether we like it or not, K-shape is a reality. Indians are high spenders on luxury items. So to that extent, if you look at the hotel industry, done well, will continue to do well in that market. So you need to be, cognizant of the fact that this part of the market is kind of inflation proof. It's done, in fact, the reverse. The more the inflation, the better they're doing at this point of time. So therefore, I think and last the least, if government wants to spend 10 lakh crore in capital goods, I think you have no choice but to enter that market. And good part, you got good MNC stocks in the system. Therefore, you can be safely sitting there, high dividends, good, no leverage. If government wants to spend this kind of money, they will take it willingly. And you as an investor should partake. Best part, no dilution of equity of capital goods companies. So you're not fearing tomorrow morning there will be a big public issue, etc. In the automobile space, you're better off in the tractor segment, you're better off in the commercial vehicle segment than in the passenger vehicle segment. And we've seen how soon that so-called waiting list disappears in this market. So my bet, again, linked to the capital goods sector, is the fact that you would rather go for sectors producing the bigger item, the capital good machinery items, the trucks, big trucks, etc., dumpers, because that will be in huge demand and there's a need to replace them every few years. You can't keep running like a car for 10 years. Replacement cycle of a dumper is 3 to 4 years. So therefore, you also see replacement demand coming much faster. Therefore, I would tend to believe that if you want auto space, the place to be is commercial vehicle, industrial vehicles, rather than being in the passenger vehicles.
And well, with that, we're completely out of time on this one. Don't go anywhere. Stay tuned. The markets will take the action forward. Thank you so much for tuning in.